Hi guys, this is Sector. I hope you guys had a great weekend, but now it's time to get back to work, isn't it? Alright, today is Monday, the 5th of November 2007. It's 10 minutes to 5 p.m. London time. The London markets will be closing within the hours. It's about time for me to wrap up the day. Record the video and well, relax a little bit after a full day in front of my trading desk. Okay, today I took no entry, I took no trade. I was following a few setups, but some of them got the trade plans, the respective trade plans got violated, and a few others are not yet fully ready. They haven't quite unfolded yet, but nonetheless, let me review them for you. Okay, first of all, I was following the Australian dollar against the New Zealand dollar on the 4-hour time frame. We've been seeing a beautiful uptrend as per my three moving averages. The three moving averages I usually follow, all of them pointing up. All of them are parallel to each other. No crossover whatsoever, price nowhere near the 100, etc, etc. So I was basically, of course, looking for long entries. Moreover, I was spotting this sideways channel, okay, formed by this double top at around 120.70, and by the previous swing high, former resistance, now working as support, okay, at 120.00. So it was basically as usual that I see a range bound market condition in an uptrend. Sorry, I usually wait for a breakout of the sideways channel to the upside in order to search for long entries. In this case, what we've gotten, as you can see my screen, is a breakout to the downside, and therefore I had to cancel the whole thing and search somewhere else for entries. All right. Okay, next up, the GBP against the Canadian dollar. I was basically looking to trade, searching for short entries in this downtrend. Okay, same thing again, moving averages pointing down. Therefore, I want to. Oops, I just dropped my mobile phone on the ground. 1 second. All right. Where was? Yeah. GBP Canadian dollar 4-hour time frame. Those moving averages nicely pointing down. Therefore, I was searching for short entries. It's just a matter of finding the right timing to enter short in this market. In my opinion, this was the optimum level, the 196.00 level. It was the optimum level to search for short entries in this market. We have a previous swing low there. We have the dynamic area of resistance coming down at that level around there, more or less. If we project the moving averages, we also have the 50% Fibonacci retracement there, etc, etc. So upon the market open, I was basically waiting or hoping, praying for a retracement back up. But as you can see, well, price has decided to go all the way down, making new lows in this downtrend, and therefore giving me no retrace back to this 196.00 level that I was seeking to enter short from. So you know, basically I had no chance to ride this nice down move that we've seen today, over 200 pips. Not bad at all. Unfortunately, I couldn't profit from it, but anyway, it's been a nice down move. Next up, we have the euro against the Canadian dollar. I was telling the guys how this is looking very nicely on the 1-hour time frame. As usual, those moving averages nicely pointing down in order, etc. However, I was telling them that if we zoom into the weekly chart, into a very zoomed out weekly chart actually, we can see that we are now slapping previous levels of historical support. Okay, this is the beginning of year 2006, actually Christmas 2005-2006, making a double bottom right there at that level, the 135.00 level, and we are now slapping that level once again. Okay, I was telling the guys how if we indeed break below this level in the direction of the major downtrend move that we've been seeing throughout the last the last half a year actually, in all the Canadian dollar crosses. Well, if we break below this level, this is gonna give very nice short opportunities in the following days. Today, for the time being, I still gotta wait for that level, okay, the 135.00 key reference level to give way. Like I say, if it does over the few following days, I will definitely be searching for short opportunities on the euro against the Canadian dollar. Alright, next up, did I tell? Yes, I told you about this already. Okay, let's go for the USD against the Canadian dollar. The loonie. Two possible scenarios. I was telling the guys this morning, my mailing list, there were two possible scenarios I would like to enter short on the USD against the Canadian dollar. First of all, in the 4 hours time frame. Sorry about that, I'm getting old. Okay, first of all, USD against the Canadian dollar in the 4 hours time frame. I would have liked to see a retracement back up to former support levels, hopefully now working at resistance. In this case, it was the area between the 0.9400 and the 0.9450. All that area had a number of different elements of resistance, you know, Fibonacci, retracement, dynamic area of resistance, previous swing low, etc., etc. Many elements of resistance coming together at that level. So I would have liked to see a retracement back here, search for a reversal formation around that area, just like we saw here, or here, you know, or here, or like any after any other retracement. Searching for a retracement, for a reversal formation there, and from there riding a new swing to the downside, just like, well, you know, like in here. Okay, well, basically looking for the same thing. And also I was telling them the aggressive way of trading this would have been the hourly chart. For letting the moving averages catch up with price, which is actually happened right now, and searching for a breakout of this sideways you know, congestion area. As the moving averages catch up with price, then search for a breakout to the downside in order to enter short. Of course, this still hasn't happened. Okay, it's still moving sideways, and the moving averages still haven't quite caught up with price. But nonetheless, this setup is still valid, and I will keep it on my watch list for tomorrow. In fact, let me show you another screen. Okay, in this case, this one, the New Zealand dollar against the Canadian dollar, which is the last setup that I've been following today. Basically, another nice downtrend, okay, another sideways congestion area, waiting for price to catch up with the dynamic area of resistance to catch up with price, and from there to hold to hold price, to push it down, okay, and from there getting a breakout of this sideways congestion area, a breakout to the downside below the channel bottom, okay, below this double bottom, and also below the 0.71 level, in order to search for in order to ride a whole new swing to the downside. Okay, I would not like the dynamic area of resistance to be broken, to be breached. Okay, in fact, I want this level to hold. I don't want to make any new highs for today, and from there I want to see price moving within the range area once again, and eventually getting a breakout to the downside now that the moving averages are finally pushing, hopefully pushing. That's my wish, you never know. Okay, it's basically, it's what I call the staircase formation. Okay, you guys have seen me trading this thing many times. You have a downtrend, then you search for an area of, you know, sideways congestion area. Let moving averages catch up with price, and from there you ride the breakout to the downside. Okay, next thing, you know, the next day you get the same formation, sideways range. Okay, the moving averages catch up with price, breakout to the downside. Now same thing, you can alright, sideways range, moving average catch up with price, and hopefully riding a new breakout to the downside. Alright. Okay guys, that's all for today. Tomorrow we'll still be looking to enter short on the Canadian crosses, but today no trade has been taken. Okay, bye bye.